my sales week? Because the time that really counts is in the presence of the prospect. Majors and minors. Here's another key time management essential. Don't mistake movement for achievement. It's easy to get faked out by being busy. Guy comes home at night all exhausted, falls in the chair and says, oh, I've been going. Here's the big question. Doing what? It's not the going. Some people are going, and they're doing figure eights. Their progress is small. So don't mistake movement for achievement. Here's another one in sales we learned. Don't mistake courtesy for consent. If somebody's pleasant and they nod, you say, oh, they're going to buy. No, they're courteous. You can't mistake courtesy for consent. Now, here's a big one, concentration. I had to learn this. All those years ago, I'm in the shower trying to compose a letter. Found it turns out to be a strange letter. So here's what I learned to do. Save the work till you get to the office. Save the work till you get to the work. Don't try to get to the office on the way to work. On the way to work, enjoy the way. In the shower, enjoy the shower. Then go to work when you get to work. I found this to be helpful. Concentration. Here's another big one. Learn to say no. I'm telling you, in such a social society we have now, it's so easy to try to be a nice person, saying yes to everything. Find yourself overloaded. Now you got to call and make the, well, gosh, all the time it takes to back out of something that you said yes to too quickly. Here's what might be better. I don't think so, but if that changes, I'll call. Little things you can use not to overcommit yourself. My friend Ron Reynolds says, don't let your mouth overload your back. It's a good one. Now, here's a big one on time management. When you work. When you play. Don't mix the two. Don't work and play. I used to take my family to the beach and I would bring my briefcase. I learned not to do that. Or at the beach, I'm saying I should be at the office. Now my family's upset because I'm at the beach and I'm thinking office. Now when I'm at the office, I'm thinking what? I got to get my family to the beach. So things are not going too well at the office because I'm thinking beach, and things are not going too well at the beach because I'm thinking office. Here's what I learned to do. At the beach, be at the beach. At the office, be at the office. When you work. When you play. Don't mix the two. Don't work at play. Now here's one of the most important ones. Don't play at work. Work is too serious. You don't want the reputation of being the office joker. It's not a good one. Yes, there's time for some pleasant stories. Yes, there's time for a little humor. Yes, best if it's a happy office, of course. But I'm telling you, you got to be serious about work because you're parting with a piece of your life for the work you do. Your work costs you a piece of your life. Here's what it's called. Serious business. Not grim, not unhappy, but serious. Don't play at work. The old expression, I don't think we use it anymore, horse around at the office. Play around, play jokes, play tricks. No place, not at the workplace. At the beach, yes. At the bar, yes. Somewhere else, not work. You got to treat work with all due conservative passion. Because it's leading you to your future. Here's another key phrase, all work is good. You may not like your job, but if it's the stepping stones to get you to where you want to go, you got to appreciate your job. You don't have to have a passion for your job. Here's the ultimate passion, a passion for incredible success in every department of my life. That's the passion. But don't look down on some menial job you have to do to finally get you to where you want to go. No job is menial. No job is not, no, every job is noble. Training life for pay, making a contribution to society. Next, analyze how you are. And if you have some weaknesses, if you can't, doesn't seem like you can change, here's the key: get it covered. I used to keep promising myself I'd keep the books, keep the books, keep the books. Finally, I gave that up. And back then, it only took me an extra 50, 60 bucks a month for some accountant to keep the books. I said, no, I'm going to save the 50 bucks. You can't believe what I started losing in productivity because I tried to save the 50 bucks. So the key is, a lot of the time you can stay like you are, but just make sure you get it covered. Next, beware of the telephone and all other systems of communication, especially the telephone at home and systems of communication at home. And here's one of the best lines I've got for you for the weekend. Let all communication systems serve you, but don't let them intrude. When it comes time to have dinner with your family, you shut off all systems, unless the ones that can take messages silently. Don't let the phone ring. Don't let anybody intrude, come through the front door nor the back door, nor through the telephone or any other device. So you can't reach John and his family when he's having dinner.
All right, so good evening, everyone.
Couldn't get through.
Let me know if you're able to get audio from my end. Simply just put a 1 in the chat box and let me know if I'm able to come through clearly for you guys.
We're visiting and have this time with our family. Nothing intrudes.
Okay, awesome. All right, so again, I'd just like to apologize for the late start again. Got caught up in a lot of traffic on my way home. All right, so as usual, these weekly scans of the live market, it's pretty much to give everyone an outlook on the week that has passed and also try to make a forecast out for the week ahead. And we generally focus on the major crosses. So it's pretty much the USD pairs from Euro, USD, Pound, Yen, the Swiss franc, USD, CAD, Kiwi, and am I missing out anything else? I think that's it. And we'll also have a look at gold. And closer towards the end, if anyone that's on the live generally have a pair that they have in mind or they want to get feedback on, then I can do a quick analysis of that pair as well. The aim of these sessions aren't to necessarily give trade signals. It's just to give an overview of the market, an overview of the pairs itself. Each and every one of you should have your own trading strategy, your own style of trading. It's to get and you can utilize your strategy based on the information that you would have gotten here through these scans and determine how you can capitalize on these pairs. Right, so I'm actually just checking right now just to see where the Aussie dollar is for the moment, because I know there was supposed to be some news coming out of the market. I'm actually anticipating weak data coming out of the Aussie dollar, so I just wanted to check on that real quick before I begin the session. Okay, so forex.com. Let's refresh this page. Alright, so just checking this data. Just no, I didn't really have any. Okay, there you have it. So sales data pretty much coming in under lower than what was expected, and this I would believe have a lot to do with the China trade deal. And even though we should see this data pick up going into next year though, but I was actually anticipating some weak data out of the overall Aussie market in terms of retail sales, as Australia pretty much depends a lot on China for their output in terms of the things that they're more sales driven or retail sales driven in terms of their economy. So a lot of the data that comes out of China generally affects the Aussie and the Kiwi dollar as well. So if you want to add that down, I guess you can definitely take that into consideration as well. So if you study the Chinese economy and their output, it generally gives you a good overview of what is to come from the Aussie dollar. All right, so let's get started, and we generally start off with Euro USD. Now, at last week's session, we were, let's see if we can identify where we were, down in these areas. It was the 27th. And I was saying, based on what the market was showing on the daily time frame, I was saying we should anticipate movement back to the upside out of the euro, out of the US, Euro USD, followed by plays to the downside. Now, we got the move that we're looking for up into this entire area. Now, I was saying what you pretty much need to start to look at is the creation of a whole new trend. The market was still in a downtrend. It simply broke the level that it was in, but it still respected the anchor overall to the downtrend, right? So the overall direction of the market was already down from before. What we found is that the market simply found a different route in which to take to move to the downside. And we saw the market broke trend here. Now what you find generally when the market breaks and give you this double top, you'll find a push to the downside. Now every time the market creates a double top, it generally retests the neckline. So that's what we saw, and we indicated that the price would come into the neckline. From the neckline, we anticipate the market to push down here, simply because even though the market broke downtrend here, this was the anchor holding the trend. So for us to consider the Euro USD long, we would need to see price above this entire zone, right? We did not get any form of price acceptance there, but we also have to consider the fact that the market broke through the downtrend. It's a first indication that the trend wants to change. It is not a guarantee that we should be looking at longs. This level here becomes the anchor holding the uptrend in place. So that's why we find that the market pushing down will generally respect this area as well. So we need to get confirmation beneath this level to confirm the downtrend. Otherwise, you would simply have ranging price action in between these overall zones. That's pretty much what you would be getting out of the market, right? So from we identify that data, I was able to say, look for strength out of the euro coming into this week. And that's exactly what we got as well. So when we pull that down to the 4-hour time frame, I was saying this is the area that you want to be watching, the lower ends of this zone, which is 0991. That's the level that you want to be looking at. Now that we are here and price pushed all the way up here to test the highs of 111, and we're back in a key level as well for price, I'd simply be holding my overall bias back to the downside. So now we have completed the move to the upside. So all you should be looking at now is for continuation to the downside. Now, I mentioned in last week that there's a gap in the market. There is an imbalance in the market on the downside, and I'll show it to you guys here as well. The market created an imbalance on the weekly time frame from 2017. You find that gap there. So that in itself is an overall imbalance in the market. Let's just delete this. When we find these gaps in the market, it is telling you that there's a void in price. And it doesn't matter how long price takes, it will find its way back in that zone. So the closer you are to that price, that should become your overall target point. Granted, this is a weekly time frame, and we may find price range in and around this area, but until price pushes or fills out this overall zone, I would not be holding any form of long bias towards Euro USD. The trend in itself is still to the downside, right? So when we look at that data now, I just wanted to show you guys that. So from here, all I would be simply looking at now is support zone as again, and this would be the level that I'll be looking at. So my immediate level for Euro USD is to target the 0941 level, right? The level that you want to be watching now. This will be a strong zone for the price to break, and that's why we find the market simply building up in and around that area. So based on that, watch to see what price does in this entire zone. The market is building liquidity here. You can easily find the market make another move to the upside before continuation down. But the overall play is that we should be anticipating the market to make another push to the downside here, right? And given the fact that this week we have non-farm payroll data coming out of the US, I would be anticipating some pretty good data, pretty good numbers in terms of job coming out of the US. So we should get that data to help to bring the price to the downside, right? What's the next one on the list? Okay, that's not it. Pound USD. This now pretty much got it all off. We got the market to pretty much move in our favor from the week before. And we're saying we wanted to see the price push down here, give us another move inside here, and then we can anticipate further movements to the downside. However, with the UK election in the balance, and I've said the polls and all these things that's coming out of out of Europe, out of England now in terms of fundamental data, it's giving the Conservative Party some strong indication that they might win the next election. They're having good numbers coming in, so they are heavily favored to remain in power going into next year. And we're looking at election is when the 12th of December, so that's literally next week. I would still be holding this move to the downside, but the level that you want to be watching now is in this area. The market is still down. All we simply got here, and for those who understand Elliott waves analysis, this pretty much completed the fifth wave out of the first leg, the first drive out of the market, right? We simply broke out of this entire liquidity zone here. We want to be watching to see what price does as it approaches this entire area. So this is the level that you want to be watching. 31.70, 31.80, in and around that area of a price. And then now from there, I would still be holding, and I've made several statements on this before, that I'm actually holding pound all the way down to 126. The market needs to find its way there before continuing to the upside, right? And pretty much in a strong area of a price as well. I think that level is actually the weekly downtrend anchor. That's where we are right now in terms of the weekly time frame. So anticipate further movement to the downside now out of pound. We were looking for that last week. During the course of last week into this week, the market simply shifted to the upside, right? So, and we probably should have anticipated that, especially the fact that we were anticipating weak data out of the US, and we were actually forecasting for euro to go to give us movement to the upside. So we should have probably been looking at that as well for the pound, right? But anyway, that has passed. This is where we are right now, and I would simply be assessing the market to give us further plays back down in these levels. This would be your first target area. In fact, if you're looking to trade this, your first target zone is right back in the support area. this would be your first target zone that you want to be looking at, that 29.30 level. And then from there, expect the market to hold up a bit and then continuation to the downside. But I'm actually holding on to this play to the downside. USD CAD. And again, weak data out of the Canadian dollar. I was anticipating the market to simply push down into this level and then from here give us another push into this entire zone and then from there continue to range a bit before moving here. So the overall target was to the upside there. We did not get that price at all. Once the market hit this 132 zone, we simply crashed through that level and finding support down at 31.80, right? So from here, again, this level is a strong area of a price as well. So we're simply assessing the market as it approaches here, right? And we're simply looking for plays back to the upside. And if you realize, all I'm simply looking at is pure price action here, right? So from where we are now, we should be expecting further movements to the upside. And if you look at all these pairs, we're generally seeing strong push or should I say strong or strength in the US dollar coming into the next week, right? So the level that you want to watch in this area, if the market push it, if the market close beneath this level here, and let's see how far this is in terms of price, that's another 54 pips. So just be careful around this area before you jump in to hold a trade to the upside, because we can find that the market simply pulls down and do a test of these lows. Right, so just watch the price as it operates in this entire zone right here. That's a 132 level. That's a 131.85, 131.90. Call it 132. So in this entire zone, this is where you want to be watching price. See exactly how it operates here. Then from here, we could possibly get another move to the downside, but ultimately we're looking for longs out of this. USD JPY. And again, this market played out for us superbly, right? I think we at the time last week when we made this call, I said we're actually analyzing the trade with our team, and we're looking to take a short trade out of this market as well. We did in fact took that trade, and I closed that trade out manually yesterday. So I didn't even allow it to hit this overall level. Saw the movements down here. I was holding on to the target level right here. Realized that the market was giving me signs that it could make a push to the upside. So I simply closed the trade manually, which was actually a very good judgment call on my part. Right? So now we are here. What are we expecting? At least a test of the recent highs. That's it, simple. The levels that you want. So because we're here now, don't be surprised if we get, so this is the area that we're looking at. Let's use a green for the target level. Don't be surprised if we get the market to do another test to the downside here, right? The market may simply do another test to the downside here. Let's just have a quick look on the daily to see what it looks like. Solid uptrend. Right, and we're in that 21 period moving average now. So like I said, don't be surprised if we get another push to the downside out of this pair. Let's see. This is one. Boom. 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 So we might get another push to the downside out of this pair. So this area, right in and around this level. Watch that level keenly. Let's pull it back to the 4-0. this area 108.64. Watch that area and see how it operates in terms of price, and then you can easily look for plays to the downside. Again, this is a classic move out of the market as well. So if you guys assessing the market, simply look for these moves as you go through the trading. Impulse, correction, impulse. This move in itself is an indication that a trend is looking to take place in the market. This pivot point here simply becomes a resistance zone for price. That pivot point will become a resistance zone for price. The top of that as well is also resistance. So we have an overall area of resistance where price will simply start to bounce around in that overall zone. However, the first thing that you want to be looking at in terms of the market in itself is once you see a move like this out of the market, impulse, correction, impulse. Watch this level for the market to retest. Simple characteristics of the market, and we're looking again for the market to break this level in order to continue an overall trend. Right, so that is generally the start of a trend in the market. So these are some of the things that you want to be looking out for as well. Right, so the market simply pushed down into this area here. There was divergence in the market. That's why I said that I simply exited my position at this level. Now we get in the market to push here. Right, now it's the same thing that we get in as well. We find what? Like I said, it's right here. Impulse, correction, another deeper correction, market push up, creates what? A double pattern. So again, whenever you see that, look for the movement back into the neckline before the market continues to the upside. This level will act as resistant level and gives the market strength to just finish off in this entire zone, finishing this entire zone before continuation to the upside. So those are some of the things that you want to be looking for as well as you go through your trading. So ultimately, holding the market to approach back these highs. So we may find that the market give us just a slight move back in there before continuation to the upside. So ultimately, that's what we would want to be seeing. USD Swiss. Again, this played out very nicely for us. Smashed through the target point that we're looking at. We're saying that because we're up in this high, watch this overall zone. Watch what the market does. If you realize the market didn't even give you a confirmed close above that entire area, pushed higher but simply fall back in this entire supply zone and simply push down. So now that we're here, same play again with the JPY. Watch this level, and from here we're simply targeting back the highs. So that's all we're simply looking at, targeting back the highs. Pure price action trading. And like I said, trading itself is very simple. The most important thing is to understand price and the movements of the market, because price ultimately creates the structures in the market that we always try to trade, and all these things. They're all created by price and how price operates and moves through the market. So if you follow the price, you can't go wrong. Right? Not to say that you won't get losing trades, because that's all a part of the game. And if you look at the market now, what's the market simply doing? Bouncing in and around this overall zone. That's all the market's been doing. Stuck in this entire zone. But even though it's in that zone, we still find that the market still continues to trend. So it may appear that it's in an overall range, but there is still a trend in effect in this overall range, because you find that the market is still giving you higher highs, higher lows, continuously getting them out of the market. And let's just highlight it there so you can see. Each time the market creates a pivot low, it gives you a new pivot high. right? So all we're simply looking at now for the push upside to the upside, and simply for the market to create a new high as well, just to simply move through the trend in itself, right? Again, the market was already in an uptrend. We simply got to the peak here in that pivot high. The market swung, stuck right within the anchor of the trend, and then we found pure range in price in between the peak and the anchor, building the liquidity that it needs to push to the upside. Its market in itself needs liquidity in order to move. It's the only way that we can get the price to move, through liquidity. We need the volumes, we need buyers and we need sellers in order to allow the market to move. And then once we have enough buyers and sellers in the market, then now you find that the major players who ultimately move the market, which is we're talking about the large financial companies, mutual funds, and the banks and the hedge funds, all these things, private equity firms, those players who don't use leverage, right? They use pure hard cash to execute trading positions. They need the liquidity in order to move. So you will always find range in market, and then all they're simply doing, we allowing the volume to build in and around these areas so that they can ultimately push the market to their desired direction. So from here, like I said, first target point back in these highs, overall target point back at previous high. NZD market pretty much played out nicely as well. We're saying to do what? Anticipate the market to push up. We didn't even, based on the strength that we got out of NZD, we didn't even get the market to push to give us the retest into this entire zone that we were actually anticipating to happen. And I was saying, watch this level. Your 64.30, that's the zone that you want to watch. A break and a close above that area would give you strong confirmation that price wants to push higher. And that's ultimately what we got. Smash through the target point that we were looking at as well, right? So if you would have taken this trade, you're looking at what? This is possibly a little over 100 pip. See? Over 100 pips on that trade that you would have simply gotten just by looking at these levels. So now that we're here, let's just have a quick look on the daily time frame just to see where we are now. Let's eliminate some of these things that I want. Now that we broke through that overall zone, what's the level to be looking at now? Still in the downtrend. Still in the downtrend. That's the first level. That's the overall anchor to the market. Let's see what price is doing. So we're a good look at distant. This market should give you back some further plays back down in these lows, possibly. And let's just do a quick test. Shares not trading yet in Sydney. Asian shares in New Zealand rising about 0.5% here, snapping a two-day drop as bank says there is no need to raise additional capital to meet the RBN's. This is around 50. Now it comes to what we're watching later this morning. Alibaba shares certainly a view in Hong Kong. The stock has been rated spot on. All right, so yes, so this becomes the area that you want to be watching for price. Look for the market just simply head back down into these overall zones. And so this becomes your target point level that you want to be looking at for longs, price breaking above this zone. So the level that you want to be watching is the 6600 mark. So this is a zone that you want to be looking at. From here, looking to carry the market back to the downside. We may not get the push up here, but that's the overall area that you want to be looking at for price. Right, and I said you from here you can use your own strategy to determine your overall entries and exit points out of the market. Let's just see. And there's strong divergence in the market as well. So that's the overall level that we're looking at. Again, I was saying based on where the market was with Aussie USD, I call it that this was a tricky one to pretty much determine, and we just simply need to assess price as it approaches overall zone. I was saying I would be more inclined to anticipate the market to push to the downside. However, don't be surprised if you get the market to push higher. And as it did, the market simply pushed higher. So personally, if I was trading, if I have a conflicting bias out of the market and I do an in-depth analysis and I still cannot find confluence towards any one direction, I simply would have just leave the trade alone, right? But ultimately, we got the movement that we're looking for. We got the movement to the upside. Not to say that we're looking for it, right? But we're saying the market could pretty much go either way. That was really just a toss-up. So now that we're here, anticipate the price to push back into this zone. Again, this becomes the area of reference for us. 68.10. That's been a very strong level for price in the past. And since we've started these sessions, we've always found that the market simply hold up as it approaches this entire area, time and time again. So we shouldn't be expecting nothing else but a hold up in price. Not to say that the market is going to turn and hit and go back to the upside. Still holding the market to push down, but just anticipate price to stall. This may become a slow burner, just taking its time and finding its way down. All right, so that's what we'll be looking at. Goal. Spot on as again. Again, we were looking for what? Out of the market. We were here, and all I said to you guys, simply look to target the 1480. That's the zone that you want to be targeting, 1480. And from here, movements from here, and would actually be looking to target 1430. We said that price needs to fill out this entire zone before we can hold any form of long bias towards gold. And that's all we were looking at out of gold. And we got that. Right? So we want to see price find its way back into this entire zone, this entire area right here. We already got the move in this area. So we got price to find its way in this overall area. Now we're looking for it where? On the underside of that zone. And that's all we're simply looking at for price. So anything in and around this area. However, my target point is right here. I do anticipate the price of at least test 1400 before we get that next bull run out of gold. Anticipate the price to touch 1400, possibly by January, February next year. We should be getting down in these lows, and then from there, anticipate gold to at least hit $1,600 before the year end. Right, but again, that's just overall predictions out of the market based on my studies that I've been doing on the dollar in itself and the strength and expected strength and weakness out of the US economy. Right. So now that we're here, we're just simply working with what price is giving us. And we're trying to anticipate that the market is simply going to make an attempt of these lows. That's all I would be anticipating now from price. Right, the level, and again, we've already gotten a push up into this area, 1484, 1483. The market did its run to test the highs here. Did its run and test that highs, tag that level. So all we should be looking at now is for plays to the downside for gold. And I think, but we know that we're already in a trade in this. We have secured profits on this trade already today. So we're completely, we have a few positions open, all of which are risk free at the moment. And we're just simply holding on to that position and simply to try and push price lower. Yeah, we actually got in right at the top of this movement right here. We got in. Entered it yesterday around, I don't remember exactly where we entered the market yesterday. I think it was about 1477.50 in and around that overall area. But we got stopped out on it. Reassess the trade, realize that we just pulled the gun a little bit too early. However, all the plays were still there. The setup was still active. Everything was still valid. So we just searched back for another position. And we did just that. Took the trade, execute our position, bank profits off that. And now we have a risk-free trade. And I'm not sure if the entire team will actually be as bold as me, but I will be holding on to my position all the way down here. If I get stop out, simply search again for another entry. It's a completely risk-free trade. However long it wants to take, I don't care. Just simply holding it out. All right. So that's pretty much where we are in terms of price and the overall weekly outlook at the market in itself. And as I said, we focus on the major pairs. So to simply do a quick recap, and if you guys have any pair that you'd like me to look at, you can simply put them in the chat box and I'll just take a quick look on them as well for you and give my overall view on that. All right, so to start off, like I said, we're holding on to Euro USD and we're holding price to push to the downside to make an attempt at 0940. That's the level that we're ultimately looking at. For pound USD, again to the downside. So pretty much we're anticipating strength out of the US dollar, right? The levels that we're watching is, let's identify it. The key level to watch is 3170, 3180 in and around that zone. USD CAD movements back to the upside. Pretty simple. We got the movement down. We were saying that we got the build up of the play that we wanted in this entire zone. Now we get the movement to the downside. Anticipate the market to simply push to the upside. All right, so this is actually a pretty accurate trade that you guys can take. This is one of the pairs that I really don't trade though. Doesn't matter how often you may see me here and assessing the market and I can pretty much call the levels and the work. This trade just failed to give me money, so I just leave it alone. Again, I just simply looking at the market for here to simply push back to the upside. Right? Levels that we'll be targeting back in these highs. USD Swiss back to the highs again. Have the targeted levels. NZD short. Aussie USD short as well. And as I said, we're already getting the movements out of the market to the downside. And this is in the Australian session. With that wheat data coming out, don't be surprised if we get the movements coming in already. Gold back to the downside. All right. So that pretty much completes this week's scan of the market. Do you expect strength out of the Canadian dollar? And let's just take a quick look at in itself. Where is it? Where is it? Where is it? Okay. Do a quick look on that for you. But actually be looking for strength out of the Canadian dollar, yes. Because from where we are now, expect oil price to come into this entire zone up here. Need to, there's an imbalance in the market in this entire zone. This entire zone. Price needs to get into this level before we can look to the market pushing lower. So what the weekly looks like. Market test a 61, push down. Did another test at it, test a 50, still stuck in this overall zone. Check from here. So boom. Then from here, interest rates for the most part of the last 10 years in Japan have either been at zero or below zero as well. Let's actually do it this way. Rates have helped economic activity pick up. And how do you look at that? Because you're also sitting with the bank, and low rates don't necessarily help your business. Yeah. So I'd actually be looking at strength out of the Canadian dollar. And like I said, without assessing the index, because I generally assess the index on their own. I generally assess the index on their own to give an overall view of the currency in itself. But if I'm strapped for time, I just simply have a quick look at oil. It generally gives you, and watch WTI, right? West Texas Intermediate. That generally gives you a solid indication of what the market looks like for the Canadian dollar. So let's look. Down to the daily. Yep. Should be getting strength out of the Canadian dollar. But the fact that the moving averages are pretty much flat at the moment, you could get mixed views. You could possibly see the market just ranging in and around this area a bit. So most of the Canadian peers should actually be set up for ranging price action, because the market is pretty much stuck in an overall range. Right, flat moving averages, the 200 and the 50 pretty much flat out for a while now. Right, crossing up and down above each other. So we should be expecting a little bit more place to the downside. And so that's pretty much it. Any other thing else that you guys would want me to look at before we close it off again for the night? And no problem, Chris. All right, so if there's nothing else, I'd just like to thank you guys again for your time. If there's any help that you need, you can just simply send it out in the group. As long as I'm available, I'll just try to offer my assistance to you. All right. If you do want to take advantage of the mentorship course, we start on the 9th of December, and it's a that's a group mentorship session. Euro NZD, I'll take a look on that for you. And so we start on the 9th of December. All right, this again, I remember when we did this, if it was last week, the 27th. Yes, I guess I was anticipating the market to push higher. Didn't do that, it simply pushed down. That's what the 4-hour look like. Yeah, simply push down. Again, I would actually be looking for, again, based on the data coming out of Australia earlier tonight in terms of the retail data, I would actually be looking at the market to push higher, not just pure fundamental analysis. Level 67. Even if we get price down here, that it would actually be too low. So I would actually be looking at this moment in time. I would be looking for longs out of the market. This becomes the area that you want to be watching. So we get the build up there. So that's what the 1 hour looks like. And that's the level that you want to be looking at. So look to see the market push back in this area. If you're getting plays, so this becomes a key level that you want to be watching for price. If you're holding any longs, watch the market as it approaches this entire zone. Right? Watch the market as it approaches entire zone. Getting this move here. Let's see. Boom. I need to see plays back in and around this level. Another push back down here. First target point. Watch to see the market push here. So I would actually be anticipating any form of plays like this in and around this area. Push. Come back down. And then push back to the upside. Wouldn't be if it push up to this area, just look for the continuation up. Or look for sideways movement out of this. That's a one pair. I'm just simply doing this now because I realized that last week, based on my overall assessment on it that I did live. I'm not sure if you're the same person that was looking at it, that asked me to look at it last week. But the fact that I got that move, I saw the market push completely down. I just had to do a quick view to see where we're looking at. Right? And that level becomes a target area for me. So watch to see what price does. If you're buying, if you're looking for a buy and you're in the trade for a buy, assess the market around $1.70. All right, so that's the level that you want to be looking at. Don't be too pushy to take any form of buys out of the market as yet. Right, allow the market to reset a bit, especially in the these. Well, the fact that we're now at this is at 8:30, the Australian session will be opening soon, and we're still not getting any movement to the upside as yet. So we know the market pretty. This should be showing a lot of that data. We're not really getting much movement to the upside. This in itself is giving me indication that the market wants to push lower. And see it again as we look at the 15-minute time frame. You can see it again. Classic example of what the market does. As I said to you guys, look for the retest. You get it, push back down. These zones are in relation to price support, resistance, trends. That's all we need to pretty much understand out of the market. Everything else is all a build up and derivative of the market's movement through price or through time. The market moves through time with price. Right, so that's all we have to pretty much understand. As long as we're able to understand price action and the overall movement of the market, because the price ultimately builds the structures that we try to look to trade. Now, we pretty much trade in the build-up of these structures. So when we look for rising wedge and the falling wedge, we simply look and we build the play with them as they form. So that's pretty much what we try to do in terms of how we pretty much look for our trades. Right, so this is something that you can definitely look at. And it looks like that's what we should be getting out of the market. Push here, then back to the downside. And then we can look for the movement higher. So you definitely want to be looking at that overall zone, especially this level right here. I can actually call this one for you. This level right here. So you possibly want to execute a long position in and around these areas. Stop loss just around there. Take profit up in these levels. So a 16 pip stop, you might want to use a 20 pip stop or 25 pip stop loss for this trade. So let's actually call this one and let's see what the market does as it approaches in this entire area. And if it falls through between tonight to tomorrow, I'll just keep a look at it and I'll just update send out an update on it. If it fails, we leave it as that, and we still put it out there to just have an overall look at it. But this movement looks like we're getting a little bit more play to the downside before the market push higher. Right? Didn't get anything else to look at. Thank you very much. That's a Ternika. Is that how you pronounce the name? Thank you very much. I try to ensure that if I'm doing something in terms of calling the market, I'm expecting for persons to at least utilize the data that I provide and try to make a trading decision for themselves. I wouldn't want to give any form of information that I wouldn't be looking to take personally, right? So how you see me assess the market? No, well, this is just broad strokes, really. In all honesty, me just calling off levels. But we do in-depth analysis if we're actually going to take the trade in itself. And again, even for Euro NZD, this again is a broad stroke analysis of this trade setup. I just simply call in that level, right? But that's pretty much how we assess the market on a daily basis. And if I'm not sure if anybody out of the group is here. Well, yeah, I have a couple of them on the call now. So they can actually let you know as well that this is pretty much how we trade on a day-to-day basis. We simply follow price action, right? Because ultimately price, at the end of the day, it's price we need to move in order for us to make money. So if we're not getting movement out of price, there's no money to be made, right? So you're welcome, Chrissy. All right, so that's it for tonight, guys. We'll as soon as this is up, downloaded, I'll upload it to YouTube and I'll send the link out to you. So that will probably be sometime later tonight or even tomorrow. I'm not sure, but whenever it's downloaded and I get it uploaded to YouTube, I'll just simply post it and send a link. If you guys can subscribe to the page if you haven't already, and just click on the notification as soon as it's uploaded. You'll be notified and you can go there and have a view at it. If you have any comments, if you have any feedback, you simply let me know. And again, every Wednesday when we do these sessions, if you have any pair that you want for us to look at or you want for me to look at, send it to me. I would prefer you send it in an email. If you have a trade that you have challenge with, or you have a pair that you're having challenge with, and you can send me your overall setup. Send me what you think, and I'll just simply try to give you my response on that as well. All right. So we leave it for there. Thanks again for your time, and we'll see you again next week.